Boost your credit score in 2024 essential tips. Hey everyone, it's Tam from Canada Wealth Guide. And let me ask you, who here likes money? I know I do. But you know what's better than money? Free money. And that's exactly what a good credit score can get you. Today, we're diving deep into the world of credit scores and how you can boost yours in 2024. Whether you're looking to buy a house, get a loan, or just want to save money on interest, this video is for you. So let's level up your financial life together. Before we jump into the tips, let's break down what a credit score really is. Understanding this can help you make better financial decisions. Imagine it like your financial GPA, a numerical representation of your credit worthiness. Just like a GPA reflects your academic performance, a credit score reflects your financial behavior. It tells lenders how risky it is to lend you money. The higher your score, the more trustworthy you appear to potential lenders. A higher score means you're more likely to repay your debts on time, which translates to lower interest rates and better loan terms. This can save you a significant amount of money over time. Now, you might be wondering, how is this magical number calculated? Well, it's based on 5 key factors, with each carrying a different weight. Understanding these can help you improve your score. Payment history is the most important, accounting for a whopping 35% of your score. This means paying your bills on time is crucial. Next up, we have credit utilization at 30%, which is basically how much of your available credit you're using. Keeping this ratio low can positively impact your score. Rounding out the list are new credit and credit mix, each making up 10%. New credit refers to the number of recently opened accounts, while credit mix looks at the variety of credit types you have, such as credit cards, mortgages, and auto loans. Balancing these factors can help you maintain a healthy credit score. Remember how we talked about payment history being the most important factor? It's like the golden rule of credit scores. Late payments, even by a few days, can significantly drag down your score, so make it a priority to pay all your bills on time, without fail. Luckily, we live in a digital age where automation can be your best friend. Set up automatic payments for your bills, or at least use calendar reminders and mobile banking alerts to stay on top of due dates. And here's a pro tip: if you accidentally miss a payment, contact your creditor immediately. Alright, let's talk about credit utilization. This is a crucial aspect of your credit score that many people overlook. It might seem like using your credit card for everything is convenient, but maxing out your cards can actually hurt your score. When you use too much of your available credit, it signals to lenders that you might be overextending yourself financially. Imagine your credit limit is a cake. Ideally, you only want to eat a small slice, around 30% or less. This means if your credit limit is $1,000, you should aim to use no more than $300 at any given time. Lenders like to see that you can manage your credit responsibly and aren't overly reliant on it. They want to know that you can handle your finances without constantly leaning on borrowed money. Try to keep your credit utilization around 10% or less if you can. This shows that you are using credit wisely and not living beyond your means. Pay down your balances more frequently throughout the month, or increase your credit limit by asking your credit card company. This can help you maintain a lower utilization rate. Just make sure you don't start spending more just because you have a higher limit. It's important to stay disciplined and keep your spending in check to maintain a healthy credit score. Old credit accounts, your secret weapon. You might be tempted to close old credit card accounts, especially if they have annual fees or bring back bad memories of late-night online shopping sprees. But hold on, closing old accounts can actually hurt your credit score. Why? Because it shortens your credit history, which accounts for 15% of your overall score. Those old accounts, even if you don't use them anymore, show that you've been a responsible borrower for a while. So, unless an old card has a hefty annual fee that outweighs its benefits, keep it open. New credit applications. Don't go on a spree. Getting a new credit card offer in the mail with promises of amazing rewards can be tempting. The allure of cashback, travel points, and other perks can make it hard to resist. But before you jump on every offer that comes your way, remember that each credit card application triggers a hard inquiry on your credit report. These inquiries are recorded and can affect your credit score. Think of hard inquiries as little knocks on your credit report door. Each knock represents a lender checking your creditworthiness. A few knocks here and there are fine, but too many in a short period can make lenders think you're desperate for credit, which can lower your score. This can be particularly concerning if you're planning to make a big purchase soon. So, be strategic with your credit applications. Take the time to research and compare different credit card options. Look for the ones that truly meet your needs and offer the best terms. Only apply for new credit when you absolutely need it, like for a mortgage or a car loan. These are significant financial commitments where having a good credit score can make a big difference in the interest rates you receive. The good news is that hard inquiries only impact your score for a limited time, typically around 12 months. After that, they no longer affect your credit score, allowing it to recover if you've been careful with your applications. You wouldn't drive a car without checking the fuel gauge occasionally, right? The same goes for your credit score. It's essential to keep tabs on it regularly to ensure everything is accurate and on track. The good news is that you're entitled to free credit reports every year from each of the major credit bureaus, Equifax, TransUnion, and Experian. There are tons of websites and apps out there that allow you to monitor your credit score for free on a monthly basis. This way, you can spot any potential issues early on and take action before they become bigger problems. Having a diverse credit mix is like having a well-balanced investment portfolio. It shows lenders that you can handle different types of credit responsibly. While having a few credit cards is great, lenders also like to see things like mortgages, car loans, or even student loans on your report, as long as you're managing them well. If you're considering adding a new type of credit, make sure it aligns with your financial goals and that you can comfortably afford the payments. Now, before you run off and start implementing all these tips at once, let me tell you something important. Improving your credit score takes time. It's not a get-rich-quick scheme. It's a long-term investment in your financial well-being. Think of it like building a house. You lay the foundation first, then brick by brick, you work your way up. Similarly, with your credit score, consistent effort and good habits are key. So be patient, stay consistent with these tips, and I promise you'll start seeing positive changes. Even small improvements in your credit score can lead to significant savings in the long run. So there you have it, folks. Those are the essential tips to boost your credit score in 2024. Remember, a good credit score is your ticket to financial freedom, opening doors to lower interest rates, better loan terms, and ultimately, more money in your pocket. If you found this video helpful, please give it a big thumbs up and hit that subscribe button so you don't miss out on more tips and tricks to achieve financial success. Thanks for watching. And remember, every step you take towards improving your credit score is a step towards a brighter financial future.